You're about to listen to the Yet Another Value podcast with your host, me, Andrew Walker. Today's podcast is a deep dive into investing in the mining sector with Darren McLean from Muddy Waters. It is a sector that I will be honest, I feel very silly and dumb in. I feel like generalists get their face ripped off in it. Darren is an absolute expert. I think it's really interesting from him to hear about why he thinks there's so much potential alpha for people willing to do the work and really dive into the sector. It's really interesting to hear what that work is, how to do it, and all that sort of stuff. It also, as a generalist, it makes me terrified and reaffirms my thought that if I invest in this sector without spending months and months and years getting up to speed, I will probably get my face ripped off. So it is a really interesting conversation. I hope you enjoy it. But before we get there, a quick word from our sponsors. This podcast is sponsored by FinTool. Look, those of you who have followed me on the blog, on the podcast, know that the two areas I've probably thought the most about over the past couple of months is AI and corporate governance. And look, if you are not using AI, you are getting left behind. And let me just marry those two thoughts in one way. If you read through proxies, there's one thing that you know. Proxies contain a lot of information, but they suck. Companies are almost intentionally obfuscating and burying a lot of the interesting information here. Guess what? You can use AI to really cut through the noise there. So FinTool just released a thing. You can go do a deep dive into every person in a company's executive roster. So, if I'm looking at a company, I can go to the FinTool people tool. I can look at their CFO and I can see, hey, here's exactly how much he's paid. Here's everything that he's done. Here's everything that's been included about him in the proxy for the past 5 years. Here's all of his key incentives points summarized, laid out so that, what used to take me a day of going through 12 different proxies and looking and matching and saying, was he on this board? When did he join this board? It takes 15 seconds. So look, go check out FinTool, start using AI. You are going to get left behind fast if you are not using AI as a fundamental investor. FinTool, the really interesting product, and it continues to evolve. All right. Hello, and welcome to the Yet Another Value podcast. I'm your host, Andrew Walker. With me today, I'm happy to have on from Muddy Waters, Darren McLean. Darren, how's it going?
Good. Pleasure to be here. Thank you.
Perfect. Appreciate you coming on. Before we get started, quick disclosure. Nothing on this podcast is investing advice. Full disclosure all the way at the end of the podcast, or you can find one in the show notes if you're looking onto it. Darren, I'm super excited to have you on. You think Muddy Waters and you think activist short selling and that sort of stuff, but you are heading up a specialist, investing in hard metals, mining, that type of stuff on. And, you think hard metals, junior miners, that type of stuff, Muddy Waters, you go, oh, it's got to be activist shorts, but it's mainly focused on longs and everything. So excited to have you on to chat through investing in metals, investing in mining, all that type of stuff. So I'd love to just start quick overview. What's so interesting about metals and mining, the fund you're looking at? Like, how are you kind of viewing the world of investing in that?
Oh, I mean, I could talk about that one for ad nauseum. I would say, if I was to distill it down to any one thing, it's that I don't think there's almost anybody else, or there's extremely few people on earth from a money management perspective doing what I'm doing and trying to invest the way I'm trying to invest. And finance is I always liken it to a professional sport, except there's like 1,000 different positions you can find and play. And within mining, there's so many different ways you can play mining, but specifically the way we approach it, and this is something I learned very early on in my career, was, there's so much data out there. The incremental marginal value of a data point is so high sometimes relative to the value of the company. So you can see information come that, whoa, that literally doubled the value of the company in my mind, and the stock doesn't move. And you're like, so the marginal value of new incremental information is extremely high. There are ways to discern it, but you have to be creative and you have to be willing to kind of get your hands dirty in some unconventional means. But when you get those data points and you're able to piece together a mosaic, now you know what these incremental pieces, as they bolt onto your core nucleus of, the problem set you've solved, you know how much that moves the needle. And then you realize you can be almost certain there isn't another person in the world who has that problem set booted up the way you do, and who understands the incremental value. So you get massive alpha, and I've been hooked ever since I started, and that kind of dawned on me, I'd say.
You mentioned unconventional means for getting data. Can you give me some examples of unconventional means in mining?
Yeah, I would say I go back to the beginning, and one of my first experiences was when I was working at my initial shop. There was a company I knew nothing. There's a very illustrious person in Canadian finance who still is one of the top figures in the mining sector. And he came into our office, which was a small little boutique, and took a meeting with the company. And I was starstruck at the time. And he walked out of the meeting and thought it was the best thing he had seen in a long time. And another individual in the firm who he was supporting through a small fund, he said, this should be an 80% allocation. And I thought it was incredible what I was witnessing. But it was a thesis around how much gold was in the ground in a company. And it was known to be true amongst the industry because the top analysts in the sector had decided this, and a bunch of others had agreed with him that there's a certain quantity of gold in the ground there. I was like, well, I should go make sure. How do I do that? And you went on their website and there's a data set of all their drill holes. And this is a very common thing. This is how it starts. So I get involved in early stages and assets when they're being, predominantly I do, when they're being drilled out and discovered, and looked at the data set and said, okay, how do I turn this into something I can break down? And so I took the drill holes and I built a little program that would go and plot them out for me into 2D pictures. And I created slices all along the shape of the resource body. And I'm like, okay, well, to get that much tonnage at that much grade for there to be that much gold, I would need to see, and I put a grid on it, on average, this much square, this much surface area filled per section for that to be true. And I did that. And then when I plotted through it, I couldn't see it anywhere. And I was like, well, that's fascinating. So then I went and I basically hand drew out the entire thing, mapped it out. I mean, when resources are modeled, they're done with computers using algorithms that are trying to recreate human logic, basically. I mean, you can do it with raw human logic, especially if you're good at it. And that's the kind of thing I'm good at. And I modeled the entire thing, and I realized that there was about a fifth of the gold there that the market thought. And on that basis, the company was worthless. It was a $1.2 billion company at the time, which was back in 2011. That was a big deal. They had just raised 120 million in a bought deal at that valuation, and they were going to get taken out. They were the best thing on the board. And I was like, this is going to zero. Oh my God. And so I spent like a month or two just obsessing on this. Ironically, at the same time I was doing this, Carson was publishing on Sinoforest. And
I remember,
one of the first,
I remember the Sinoforest published very well.
Yeah, so I was sitting in the basement of this guy's little boutique. 3 people worked there, one other kid, myself, who knew nothing, and another individual who'd been a money manager once upon a time on Bay Street. And he was sitting there just being like, oh my God, this Sinoforest thing is crazy. And I asked him what was going on. He explained it. I didn't know what short selling was. I'm like, what's a short? He explains it. And I thought it was the coolest thing. And then I watched Carson be right. And I just thought it was, what a way to make a name for yourself. What an amazing call. Like the most contrarian bet, sticking your name out there and, risking it, where you have to be right or your reputation's really on the line. And then I saw this company and I thought, oh my God, this is going to collapse and go to zero. And it's a very well-backed and well-owned company. And so I spent about 2 months obsessing over this, just making sure I was right, talking to people, telling them, getting guys off the bet. And then it came out that I was right. And the stock collapsed almost straight to zero.
Can I pause you?
Yeah.
With Sinoforest, if I remember correctly, like Sinoforest was just, and I don't use this term lightly, like it was blatant fraud, right? If I remember correctly, I remember John Hempton post where it was like, hey, if you believe what they say, they've got more trees than like the entire surface area of North America or something. I can't remember, but it was fraud. Yeah. What you're saying in this
wasn't that.
Say again?
This wasn't that.
Yeah. So what you're saying is this company had pitched a story to Wall Street, pitched a story to their investors. You went on, downloaded data, like did it by hand and figured out, hey, based on the density I've seen in these drill holes and stuff, a fifth of what they're projecting, which means the company's a zero because there's huge fixed costs, all this sort of stuff. I guess
exactly.
If I was just to pull away from this company, like that specific example, me as a generalist, and I want to talk a lot about generalists here. If you told me that, I'd be like, hey, I'm a little surprised. Like I know there aren't a lot of mining guys left anymore, but I'm a little surprised that mining guys weren't like all over this. Like when I look at a biotech company, if I call a smart biotech friend, like every smart biotech shop has looked at this oncology drug and everyone has a read on like how the trial is going, what they has analyzed the data. Why do you think there was this inefficiency? Was it just like the guy was such a good promoter? Do you think this is a across the board inefficiency where people aren't actually like downloading the data? Because why didn't the company pick up that the data was this bad?
Well, it goes back to what I initially said, and this was I guess, the takeaway. No one does this work. And literally, that was my dawning realization. I took two things from that. And this was right at the start of my career, which was great. One was, if I ever see anything like that again, I'm making a name for myself. And I'm going for it. I'm going to put my neck out publicly, which ended up happening. And that's how I met Carson, ironically, and as well as his business partner there. And now we all work closely together. And two was, oh my God, all the data was there. They weren't hiding it. It was all there. Just no one had done any work on it. And
What
one
about the
person had
company?
reached. They don't do this work internally. And they're just as, yeah, there's a lot of groupthink. I think in this, what I always say in the sector of mining, and especially in the earlier stages or the smaller companies, assets, really, I'm focused on assets rather than companies, is people don't really qualify assets. Analysts, bankers, investors in this sector, that's not what they do. They look for things that look like other things, and they basically run a bunch of arbitrages. And honestly, that's what most investors do, I found. They look for arbitrages effectively. They're arbitragers. They run around, they say, well, this is EPS of 18, and this is an EPS of 16, and this one's cheaper, trading more expensive than, or sorry, this one here is actually trading at X, and this one's trading at Y, and they look the same to me. I found a cheap company. And in real companies, I always think that's a fallacy. Like what really matters is you're trying to figure out the decision making of a company, and you look at a team, and it's like in a tangible example, we understand a good team is going to crush a weak team. In sports, we understand that. In finance, it's all numbers, and we just look at numbers, and lots of guys just run arbitrages. They don't realize that over the next 10,000 decisions these companies have to make neck and neck, that team will just dominate. And there's almost no world you can imagine where they won't continuously just pull a little farther ahead as they navigate every decision than the other guys. In mining, the arbitrages they're doing is they're saying like, well, that produces 1 million ounces a year, and this produces 1 million ounces a year. That trades at that trades at this. And you think, okay, that's too rudimentary. There must be all these other layers. You would be flabbergasted at how shallow it gets. And the reality is there's so little in assets and mining that's real and transactable, and that happens to create value relative to the occurrences that destroy value over medium to long terms, that there isn't enough breadth in the market for people to really just try to sit there and find deep value. Because there's just not that much to go around. Like I truly don't think there's room for 20 to 30 people on earth doing what I'm doing. Like usually the circumstances, there's a couple I'll miss every year. There's a couple I'll miss for various reasons. Sometimes I just don't see it. Not usually. Often I just can't get into the deal. The openings are small. Maybe there's like $20 million going to the deal that before the market figures this out, the company doesn't want you there, or you just can't get in, or some other guy with a relationship elbows his way in. And so you got to be on it. You got to fight your way in. There's not that many companies, and the breadth of openings and opportunities isn't big either. And so like if 99% of the market activity in this sector is not oriented around things like what I look for, then the behavior mimics most of the market activity. How do you make money? Well, you make money on a lot more schmoozy, event-driven-y, kind of wink, wink, nudge, nudgy. I think a lot of the sector does activity. And they run around. Now, it becomes a self-fulfilling prophecy. Things go up when X happens. If enough people believe that, it tends to be true. I'm talking very intangibly, but what I can say is people sitting there ripping apart assets, trying to figure out what they're worth before they come to full fruition, trying to map out the if-then sequences. Okay, if you drill here and you get another X tonnage here. I think I can build this. I can manage the fixed costs. They'll have to, it'll cost me this much to get power, water to site. I'm gonna have to deal with this. The permitting is going to cost me this. The timeline's here. I can't overachieve that with this much metal. I need at least this much. It's sitting just beneath that, which makes it kind of worthless. But then they hit something and suddenly that pushes it over the threshold. And you're like, oh my God, that just repaid everything. This went from being a meager thing to something that might be worth 5 times as much now. Because once you cross that critical threshold, you explode in value. There's just very, very few people doing that. They wait until it's told.
Do you think that's a function of just today's markets? Because I know I talked to some of my friends and they're like, look, before kind of like 2016, 2017, they say there used to just be a lot more mining, but because things got washed out so hard, a lot of them are just gone. Do you think the sector is just like, because it's fallen out of favor, there's less people doing what you're doing? Or do you think it's always been that way?
Well, I can tell you what's happened since I walked into the door, and I can tell you very loosely what happened before and why that's interesting and how it's led to what you see now. I walked in the door in 2011, and then I watched the global metals complex, which had a wild, been in a wild bender for, I don't know, the better part of a decade in the China supercycle. And in all the excess in money printing, shockingly, people lost their way. And when the party ended with a thud, and the reputation of the sector got trashed, like billions upon billions in companies that were wiped out within companies that wiped out half their value, 75% of their value in companies like Bre-X and others, some of the big names. And then I watched the entire metals complex, it seemed, collapse. I joined a uranium-focused firm just after Fukushima. I watched iron ore collapse down to $35, I think, from being in the hundreds. I watched these assets that companies were putting billions of dollars into expansions just collapse and go to zero. Watched copper collapse. Gold held on a little longer, than in 2 big legs down. It just collapsed down to 1,200, 1,300, and it laid on the mat until I don't know, the late, maybe 2018, 2019, 2020, maybe it started to perk back up again. And in that period of time, something else happened. It was the driest decade for discovery in the sector, I think, ever. Meaning we found less metal than we'd ever found. And so in mining, you're constantly devouring yourself. You're consuming your company, which is funny because people apply free cash flow multiples to mining companies. But you're consuming your company. There's no terminal value here.
Oil and gas, same thing. Yeah.
But anyways, we stopped discovering. It got harder and harder to discover things. It's like copper porphyries, which feed the world. If they're exposed at surface, they give off massive signatures. You cover them with a little bit of dirt, you don't pick them up anymore. And so a lot of the low-hanging fruit, chugged and powered the world forever, was starting to come to the end of its life, and it's just a lot harder to find stuff. And the markets had crashed. There's less capital. Companies were pulling back on their capital programs to try to manage them, tighten their belts, and spending money on exploration, which wasn't likely to yield any near-term results, didn't seem like the best allocation. So drills slowed down, plus the difficulty went up. It's a compound impact, which means, the world really shut down in discovering metal. Now, at the same time, there's a big brain drain. Less people come into the sector. It's not as many opportunities. And so mining engineering, which was already kind of the engineering degree when you didn't get into mechanical, but mining was a little easier, then maybe if you did well for a year, you could backdoor into mechanical or aerospace or something like that. It fell even more out of favor. And so we saw less people coming into the sector. And the people that did come into the sector still, now there's less demand, the quality drops. But on top of that, there's less jobs for them or less roles. But the ones that do come in get fewer reps. They get qualified on fewer reps. And I was talking to a friend of mine who's about the same age, one of the top engineers, one of the top engineering companies in mining. He's overseeing 4 different mine builds. And I was talking to him, and I'm like, well, thinking of, explaining what his experience set was worth. I'm like, how many people on earth are there your age who can say that, do you think? He thought maybe 4 or 5. I'm like, exactly, 4 or 5. Now, the supply inelasticity of people is remarkable. I'm like, how long did it take for you to get an education where you could feel confident that you can go and execute on a mine? 10 years, 10, 15 years. I'm like, great. You got 4 or 5 people your age who've been qualified with that experience. How long is it going to take for the next crop to come in? Given that he came in on the end of the last cycle but again, like there's just so few people on Earth with relevant experience sets in certain areas. And I think if the
Let me
world
go
ever
back
saw how
to
sorry, you
you.
go ahead and then I'll touch on one other thing.
No, let me go back to what you're doing is, basically companies are coming, they've got these data, they're presenting to you. You're doing hard data analysis of the mines, the assets, and everything, and you're investing them. I'm obsessed with game selection, right? And what you described to me, like I I know why so many investors look at mines on the short side because it's a very promotional business.
Mm-hmm.
What you described to me, like it's almost looking for a golden needle in a really negative EV haystack, right? Like, hey,
Yes,
we're going
it's
to
a
pass
value
on a ton
destructive
of the.
industry.
It is that even worth it though? Like, is that a sustainable strategy?
Yes, absolutely. The world needs metal. This is where it comes from. Like the world, mining is like one of the lowest allocations in the world for active capital. And so if it's amazing, but the inevitability of it is extreme. We still haven't, like, you look at all the things technology has come and conquered and improved. We still haven't figured out how to drill a drill hole from surface 1,000 meters deep any cheaper. It's the same mechanism powered from like a, surface. All the horsepower is the surface, turning a rotational drill into the Earth's core 1,000 meters deep. We haven't found out a way to do that cheaper. It's if you ever could, I mean, hey, if you could put the power in the drill bit, like what Elon Musk is trying to do on like a boring machine or something like that, and somehow do it and integrate like XRF technology where they can scan the mineralogy as it goes down the hole, you would change the entire supply of metals on Earth. And yet, very little allocation of technology has been thrown to that, and no one's solved it. Mining is so resilient and slow for change. I couldn't tell you why. That's not where I live, but obviously it's very, very difficult. Um, and so the way the world gets its metal, the difficulty of finding it hasn't changed, and the world needs more and more metal constantly. That hasn't changed either. So, I mean, it's kind of like a population growth bet. If you believe the world's going to expand, yeah, the world's going to need more metal. Prices are going to go up. The supply and elasticity of talent and assets isn't really there. Um, so
In ter-
there's a huge degree of inevitability to the sector. Is it sustainable? Yes. I've never gone a year where I didn't see something that made me fall off my chair. That was an incredible opportunity. But there's something to that too. And I guess what I wanted to say quickly, and without
yeah, go
taking
ahead.
too much time on the other things, the brain drain, the lack of exploration, all these things coalescing. At the same time, when all the metals collapsed, and we'll just focus on gold mines for a second, almost nothing was discovered in copper over the last 10 years. Um, when when the whole metals complex collapses, promoters don't stop promoting. All that happens is just real assets that are in the money stop going forward because there's nothing real, because everything that worked was either built or is now out of the money because price had collapsed from like 1900 down to 12. And so when that happens, projects don't stop getting pushed forward. It's just the only projects that get pushed forward are scams. Why is that? Because gold deposits, more often than not, happen in nuggety distributions. And so it's really, really hard to find an economic gold deposit. It's not hard at all to just turn the knob a little on an extremely sensitive algorithm and blow the gold out everywhere. And so we watched, everyone knows the Bre-X story. And what I always say is they're the dumbest promoters on earth because they did it physically. You don't physically
Can you
salt
tell
the
it?
gold
I
samples.
don't know this story. I'm just a stupid generalist, but I'd love to hear the story.
Oh, yeah. I mean, there's a movie on it you can watch called Gold with Matthew McConaughey. I forget the country actually, but it was a massive gold discovery. Went to billions and billions of dollars market cap. Everyone was centered around it in the market. It was going to be a massive take at one of the greatest discoveries ever, and it turned out there's nothing there. So someone had been salting the assays, so adding gold to the assay samples
Yep.
and just faked the entire deposit. And uh, to this day, there's a lot of debate over whether the geologist actually was pushed out of a helicopter, or fell out of a helicopter, as the government claims afterwards, or whether he paid off someone and disappeared. No one knows. But
Uh,
people still do that. it's everywhere. They just do it with algorithms. And when you do it with algorithms, it's not on you. And there's a whole chain of how you can cook these things. But the most important thing is this. It's very easy to crank the resource on a gold project. Extremely easy. In fact, usually when I go in and look in a gold block model, it's off or it's wrong, and I've never seen it too conservative. So very often they're off by 100% or more. And so the only projects we saw go forward in that period of time were scams, I thought, most of them. And they blew up. Or when mines don't work, people almost never understand why. There's always a story. Well, it's just we needed more equipment and we had to, we just needed more development and the shafts just weren't working properly underground. And it's like, no, you needed to blow open the underground because you went down a drive, thought you could get 2 stopes. You found there weren't any stopes. You panicked. You needed to realize you're having a hard time finding stopes. You needed a ton of drills and a ton more access to run around gophering everywhere trying to find stopes. Meanwhile, you're not telling the market that what the evidence is showing you is that there's only a third of the stopes there and your mine plan is completely cooked. And you're like, well, let's not tell them that. Let's just try to find a way to get stopes, say we're getting stopes, see it's fine, drag it out. If the price goes up, maybe we can finance, buy something else, do a deal. And in the shuffle, no one ever knows what happened. And because of that, there's rarely ever a high IQ post-mortem on why these things fail. And so the market developed this mentality that building mines is stupid. They always fail. Don't do it. But really, the answer is building a mine is pretty much the most value creative thing you can do in the sector. Execution is the highest re-rate, far more than M&A. Just stupid people shouldn't build stupid mines. And
so getting back to our point on, so let's say I agree with all that. I do wonder, like, there are a handful of super majors in the mining metal sector and everything, right? I guess one question I would have is, why should the next great mine be funded kind of by like you and me, or by a handful of wildcatters raising kind of private money for 50 or 100 million and then, hopefully hitting success and selling? Why shouldn't Freeport be out there and just like doing all this geological work and then funding it themselves with their much lower cost of capital, like kind of superb execution from day one? Why isn't it just super majors? Because when I think about oil, like today, the giant oil fields, it's no longer. Now, oil is different, but the super majors are the one finding, discovering, managing all these giant oil fields. Yes, they are mainly in offshore, which requires a lot more. But why shouldn't it just be super majors kind of doing the whole thing?
Well, the answer is there's 2 answers. Let's just pretend every project is a fit for a super major, which they aren't, which is the other answer. But because it's not what they do. When I think of like majors, a lot of them are just run by bankers. They're kind of these bureaucratic machines. They don't really discover anything. The majors aren't out there making the discoveries. The majors just go and buy other people's discoveries. And even when they do that, they're not usually there. Like they're not there like 5 drill holes in being like, I don't care. This is like a pimple on our enterprise value and has a high probability. The expected value of this is through the roof. We're buying it now. They don't do that. It's they sit around and they wait. They want you to drill it out, advance it, and they're just happy to wait until you get it right to the altar and everything's done and dusted. And they're like, yeah, we'll take it and we'll execute it and we'll just build and run it. And you'd think they shouldn't do that, but that's just not how they work. That's a much longer conversation than I want to go into. I'm happy to have it, but what I would say is that majors have stopped discovering things. They generally aren't. I don't view them as competitors at all in what I do, looking for assets in early stages. They're people to sell to, and there are people to get financing checks from. They like to poke their fingers in lots of things. They're like, yeah, I'll take a 9.9 position there and sit and watch it. But they seldom transact unless you bring it. They're like when you think of investors and kind of boring like mutual fund money and stuff like that, and I just find people, they only buy things out of FOMO, or they only buy things on a deal or a financing when they think they're bottom ticking it. It's like and you're like, why don't you just buy on the board and make the bet early? The majors are the worst for that. They're like the worst investors for being intrepid or entrepreneurial. They're kind of construction engineering companies. Just view them as that. They're construction engineering companies. That's what they are.
I'm just laughing because I've spent a lot of time in busted biotechs recently, and you'll find so many busted biotechs where, they're looking for the cure for cancer. Pfizer writes a $500 million check for 10% of the company, so $5 billion. Then the cure for cancer fails, and Pfizer's just like, whatever, you guys, we own 10% of you, but you guys go. We don't even care anymore, right? Now, if it had
Yeah.
succeeded, they would have paid hundreds of billions of dollars. But it's like, hey, you threw a $500 million investment. You could try to recoup it, do something. And they're just like, not our problem anymore. If it's not going to be the cure for cancer, all of it's gone, even if we could try to reclaim 250 million.
Yeah. So if your business strategy is we're going to sell this deposit, I mean, you better understand the tier and the status you have to get it to be able to do so. Almost the vast majority of people pursuing that strategy aren't going to succeed. And then the other reasons they don't build projects and they aren't doing this is, again, if you saw how deposits are discovered, like you're talking ragtag guys who want to go up somewhere where you got to fly to somewhere, then take another flight, then take a bush plane, then go hike out into the woods, camp out in like grizzly country, walk around picking for rocks on a thesis, which has a fractional percentage chance of actually turning into anything. Like these are cowboys, like complete, like the characters that were prospectors who go out there and geologists, like they don't wear suits.
Do you find, for what you do, right? Do you find site visits useful, or is it really just analyzing the data and leaving the site visits to the cowboys?
It depends. If you have an underground mine and it's in operation and you're trying to figure out what's going wrong with it, I would say you have to do a site visit. I've done that a few times, and there's absolutely no way you can figure out what's going on from any reporting or any numbers unless you go physically examine it. And you got to spend a lot of time there. For exploration properties, not really. The reality is I've usually worked on Google Earth. I can go see, I can map out, I can get terrain mapping and all that. You can figure out, you can see where there's streams, and then you can go pull records. So not really. The only real reason you ever do it is just to get a lot of a person's time and just pepper them with questions.
Yeah.
That's the only benefit I get of it. But in terms of smaller mines, majors don't build smaller mines. Largely what majors also have been focused on, because they've been struggling to get people to buy their equities, because in the sector is just generally being in disrepute. And again, it's very underallocated for active capital. And so kind of what they've been doing for the last 5-10 years that I've been seeing is they've been focused on just kind of devouring each other and getting bigger and running up index strategies so that people that would otherwise not discretionarily choose to buy their equities are now forced to, because they're in more indexes and bigger ones. And the joke of that strategy, I always point out the fallacy in it, is like the value in the sector is created in two places. One is distress and two is in the drill bit. And all you do when you do that and pursue your indexing strategy is you get further and further away from the thing that actually adds value, because it just moves the needle less. A great discovery, say it turns into $5 billion. Well, I mean, you just became a $70 billion company, and great discoveries happen once in a blue moon. And so you're just sitting there and you're like, well, what's the point of trying to drill? We need to focus on buying out Bre-X and taking out them, becoming the biggest. And you're like, that's where, and so they just become bigger, more bureaucratic, and further away from what the initial premise of your question was. And that's what you're witnessing happen. And it's part of why they have very little entrepreneurialism in the way they pursue things. Now, why should people like us build mines? Because it's an extraordinarily wealth creating moment. I love mining. I love it. I wanted to build a mine from the early days of my career, not out of any weird summit fever thing. I just see that when you do it and you build the right mine, the re-rate and the value creation is extraordinary. You build these little mini economies out of the ground. It's very cool. It's a very physical thing. You create tons of jobs in a region. You bring infrastructure to areas. That's all cool. But also just like if you're a Canadian company, for example, you're in a tier 1 jurisdiction, you're of a gold mine, you produce real free cash flow. You're not stupid. You don't constantly trying to play some capital market game. You just pay off your debt. You're starting to stack capital on your balance sheet. You trade at some insane multiple. And the thing about mining is it doesn't take place in nice countries. Sometimes it does. But, often it's easier to drill and develop in really rough countries. And often you have better prospects. You discover something in a difficult country because you can actually sell to the Chinese there, and they'll pay a way bigger multiple than Western countries, because for them, it's a way to own more infrastructure and own the country. And these countries build these market caps, these enterprise values after I mean, the whole world is kind of a prison yard in terms of its organization. We live in these wonderful, nice areas, but mining takes place in like scuzzy areas. And we got a company that, that's a very volatile place. There's always some area rolling over. Like recently, Mali's been completely rolling over. It wasn't very long ago that I was told Mali was secure because they had 5 good years, you know, and the coups hadn't reached the southwest of the country. So it was safe and the French were there. Well, now the French are gone. And now the Russians have displaced them. And now all bets are off. Now junta government's in. And now everyone's in trouble in Mali. And in mining, you can't pack up your bags and leave when the government comes for you. You can't say, well, I'm Apple. I'm just going to move my manufacturing to India. No, you can't pack up your mine and go. So you can move faster, you can build faster, you can execute faster in rough jurisdictions. And when 5 years, because people have this huge recency bias goes by, nothing bad happens, people are like, oh, maybe I am comfortable building my home on top of this fault line. It seems to be pretty good. Lo and behold, another earthquake happens, and suddenly you have companies, and that for whatever reason they trade these huge premium multiples to what their assets are truly worth. They've got paper value, and they're running from, they're trying to run from the mob somewhere in the world or some bad government, and using their paper to buy a Canadian or another like U.S. or other clean jurisdiction asset they pay huge premiums for. And so I've never seen a Canadian producer that made real money that didn't either trade at a massive premium or get taken out at a massive premium to his true net asset value for that reason. So there's huge re-rates. And even if you just execute not even in that jurisdiction, that's another layer on top, like the re-rate, because people are so cynical about mines and they don't understand the value. They don't understand the real NAVs, and they kind of wait till things are borne out and proven out. That alone, I mean, times I don't even know if I could tell you the number of times I've seen someone execute on a mine build and not triple. It's just, now there's a whole other conversation on the capital in mining and why that happens too. The capital in mining has changed immensely in my time as well. And it used to be driven by funds were way more active. Mutual funds have just died. They're still there. The managers are mostly gone. There's a few left over, but they've gone up cap. They have minimum liquidity requirements. They've got minimum share price requirements, and they kind of have turned them into index funds for large cap companies. And they're not allowed to invest in small things. They have minimum diversity requirements. They have minimum deployment requirements. They're just pro-cyclical vehicles that they've shoved up cap. And most of the money in mining is just looking for parking lots where they feel safe. And so you get a good asset, safe jurisdiction. We'll trade at a premium, but always will. Great parking lot. I'm in. And now the guys who are actually driving forward mines and projects has never been majors. It's always been people, individuals. It's not funds either. And these were these like, Robert Freeland, like Lucas Lundin, guys like that. Like these guys are just killers. And they would go to the hardest places on earth and unlock these assets and discover them and drive them forward. Like Robert discovered in, out of the ground, like Kamoa-Kakula in the middle of the Congo, like the toughest place on earth, makes the most miraculous discovery and gets that thing into production. And, these are feats achieved by brilliant, intrepid men. And then there's people who are in another tier in the billionaire category. They're very good at capital markets, not quite as great as Lucas and Robert were. Like the greatest discovery in my time was made by Lucas Lundin up in the Vicuña at the border of Argentina and Chile, where you need oxygen assistance. And he found it saw it from a plane and went up there on horseback. It's just epic stuff.
Sounds like a good vacation.
Mining companies don't do that. Great men and women do that. And the average age of them has gone from being 50, 60 when I walked into, 75 to 85 now. And because of that brain drain that's happened, at the same time, there's just has not been a cast in the dearth of new developments in the sector. There hasn't been a replacement mechanism for them either. And so there's a huge opening and vacuum in the sector right now, but it's the time the world's probably growing and developing the fastest, and it's an incredible moment. So
let me ask a strange question. So one of the reasons I historically haven't done any mining on the podcast or professionally is people like you exist, right? Who are analyzing this data. Like I would have no clue if I went to any company's website, downloaded the data on their mind, I'd have just no clue to analyze it. Is mining investable for generalists, or is it only people who are completely 100% focused on it who can look at this, discover it, do any work on it?
Okay, I would say my gut reaction to that question is no.
It is not,
No, you
no,
shouldn't.
as in it is not investable for generalists.
If you're going to make a hobby out of it and do it all the time, and I would say no, don't do it. Are there
That was
specific
kind of my
circumstances?
suspicion. Yeah, I think you'll get your face ripped off.
You probably will. It's just knowing the nature of human beings, the ground's always shaking and mining, value gets created, explodes fast. It just destabilizes human logic. This is part of why and it can be very addictive. I don't see many people come in from the outside and do well. With that being said, if you understand people and share structure well and capital flows, like say you've been in it, you've had an education in money and people and how money flows and how things happen, in finance, and you could probably do it if you're shrewd and savvy and you watch companies. The reality is, like, most of the money in this sector right now is follower capital. And that's a huge phenomenon that's happened in the last like 5 years, I'd say. And this is one of my initial core theses that we were going to go into when I was talking to Freddie and Carson at Muddy Waters many years ago. And like, this is where the industry's headed. And we're kind of heading there, is talking about the brain drain setup, talking about, the expanding needs of the world. You're not seeing it catching up from the beginning end. So the problem's going to get bigger, all the stuff I talked about. But the capital itself is dying as a consequence. And most of the capital that is there is follower capital. People don't want to write checks into development companies, into exploration companies right now. Weird, because gold's at 3,300. And the reason they don't want to do it is because they're scared that it could fall back on them. That check could get spent and the company could go back and say, listen, to keep this investment going and to keep your investment from dying, we're going to need you to write another check. And they don't want that to be on them. So a lot of companies that don't have strong leads are just, irrespective of their asset quality, are stranded. And then you have a handful of companies being backed by groups like Pierre Lassonde or the Lundins. Actually, most of the successful companies in the sector are backed by one of those two individuals. And there are two of the more influential parties still playing with immense personal capital in the sector. And those companies are finding financing and incredible public support because they feel safe tucking in behind them. They know that those individuals will keep driving the projects forward and the lead from the front. They will be capitalized. The assets will go forward. They will make it across the desert to the other side. We are safe to tuck in behind. For other things, yeah, it's going to be a very tough slug. And as a consequence, if you understand that, you see people moving, you see share structure, you see certain people cornering, getting involved. You can make money following that and being smart there. But if you're running around trying to look at comp sheets and say, well, that's got 1 million ounces, I think that's a buy. No, it's not going to end well for you.
What would you be looking for, just if you were looking for the smart people corner, what would you be looking for?
Well, I mean, like, hey, look at Montage Gold. There's something that we bought a lot of. The Lundins came. So Montage was it was a difficult asset. It was a good asset. It was a gold project in Ivory Coast, West Africa. Ivory Coast has been, one of the more stable West African jurisdictions, in the sense that it hasn't had a coup in the last decade, but, and there was one just before that, but one of the better ones. And there was a good project there. It was tough because it was a high capex project. It needed to be built big, which means your fixed costs have to be high. Otherwise, you won't be able to. So it needed to be built at scale. And which means you're going to be spending over $1 billion US just to build the thing. And the payback on it was pretty slow. Like, I think just the nature of the ore body, it's going to take you like 5 years to get your money back off the table. And when you're building mines, what I always liken it to is you're going for the summit in like the Edmund Hillary days, where you don't have modern weather forecasting at Everest, and you just kind of cozy up to the death line where you can't breathe without supplemental oxygen. And you sit right there. And one day the skies are blue and you're like, better go, Tenzing, eh? And, and you just give her, and you try to get up and down as fast as you can. praying the storm doesn't roll in. And when you build a mine, you do that. You take on all this debt, you sink all this capital, you start building all this infrastructure, and you don't know what the world's going to do. You're operationally and financially levered to the most volatile variables. You cross your fingers, you pray, and you move as fast as you can. And where do you need to get to? We're getting back below the death line, and that is when you get your debt capital repaid. And Montage was going to be slow, but it had a lot of optionality, and it was in weak hands, and it was just stuck there like $100 million. And I remember looking at the asset and just thinking like, it's annoying. But if you can't muscle that forward, and I'm not strong enough in terms of my backing or amount of capital I can access or my wherewithal to be able to muster an asset like that forward, I can't invest in it because that could fall on me. And so I need to find things that I can manage. But the Lundin family can manage that. And so they had a huge advantage. And then they came in and they did a financing and they basically said, okay, we'll take it from here. And then, and I just looked at that and I was almost like, great move. It's not fair. If I could just come in and anoint things and say, everything will be fine now, instantly the company's worth more. I mean, that's the greatest advantage. The greatest edge you can have as an investor is when you change the value of the investment by virtue of you walking in the door. And they have that.
I'm rereading the Snowball, and in the 70s, Buffett recaps Geico, and he recaps them. They're in distress, and the moment he writes the check, their distress is gone, and the stock's a $5-bagger. And I'm like, God dang, that would be nice to.
Wouldn't that be
A,
nice?
It'd be nice to have that much money, but B, it'd be nice to just be like, okay, I'm here, and the distress is gone. Everything's it's just a beautiful thing.
You got to earn the power and you got to earn the reputation. So you got to go for it. You got to achieve amazing things early enough in your career so you can achieve that. And that's honestly what I try to do. And that's my ultimate goal. And knock on wood, I hope I continue to be successful at it. But anyways, yeah, Montage has been a massive success. However, the moment the Lundins moved in, it was like, buy that. Just buy that. The capital will follow. That asset, I know what it is. It was encumbered by the inefficiency or the disconnect between the strength of the strength of the asset, demands of the asset were completely non-commensurate with the strength of the company. That's fixed. And the stock didn't even move that much after they put in the money. It was like, that doesn't make it worth a bit more. That makes it worth orders of magnitude more. And you have time. It's not like the market goes boom and it re-rates instantly. And so you just watch that happen and you're like, okay, just you followed them there. You made a ton of money. That was the full depth of the thesis. Suddenly that asset could be managed. It was trading at a fraction of its net asset value. It only went up a little bit. That thing's probably going to end up trading at full net asset value. And lo and behold, it's been one of the best successes since that moment. So there's things like that. If you understand things like that, you understood why that asset was cheap and why it was weak, even though the asset was strong, it just needed strong hands. Strong hands came. It was safe. You were going to be fine, and the asset was going to do well. Yeah, you could make money doing things like that. You got to be savvy. You got to understand people, but that's one way you could do it. But at the same time, as I say that, this is to your average generalist. The reality is, I guess I was a generalist when I walked in the door, and I didn't know anything. I didn't have any background or education in this stuff, and I just started doing things by hand and trying to say, well, I don't think people would probably go to their way to do this. And, I didn't, and I just started trying to make sense of data. And I don't know, I've made a good career in it just by doing that. So yeah, if you're just completely dogged, you love digging for information and for informational edges, of course you can come in. The door's wide open and you can make it, you can find extraordinary success in this sector. So yeah, I don't want to deter people.
Do you think that the informational edge in the alpha for people willing to do work is bigger in mining than, I'm not going to say every other sector, but do you think it's much larger than your average sector?
Yes. Yeah, it's bizarre in that regard. That's why I love it so much.
Because there just aren't a lot of people doing it. Most people are just, as you said, I'm not going to say pot shop, but they're at the pot shop model, right? They're saying, hey, that's got 100 million of gold. That's got 100 million of gold. One's 80, one's 120, long, short, boom, done. And not actually doing the fundamental analysis.
Yeah, it's like you want to play poker. You want to be a professional poker player. Do you want to go every day and sit across? I mean, I don't know who the top poker players are. I played a ton when I was growing up. The best guy when I was growing up was a guy named Phil Ivey. I don't know if he's still around or not, but
I think he is still very much around. Yeah.
Did you want to go sit there and play against Phil Ivey heads up? No, No, why would you do that? You want to go find the table that the people come in from Macau who have more money than God and losing 100 grand that night. Doesn't matter. They're just there for the thrill of sloshing it around. You sit at that table. That's where you want to sit at. That's mining for me in capital markets. You want to go try to find an informational edge on like something that you've got 30 high capitalized US hedge funds chasing. Just, I don't know. That's not for me. Do I think I could do it? Sure. Do I think the amount of alpha I could squeak out would be less? Yeah, absolutely. Could you throw more capital at it? Probably. Yeah, you could put larger size bets at it from a capital liquidity standpoint, but are your returns going to be as good? No, and I'm driven by returns. And so like the amazing thing, fascinating for thing, like you can just become a self-made billionaire in mining, trading mining stocks. You really can. I watch guys do that multiple times over. Hard to do that on like large cap, mid cap US equities. You're trying to grind out like 5% alpha every year. And
I
it's,
I know some
yeah.
people who maybe not billionaires, but Nvidia call options might have gotten them close over the past couple years.
Okay. Yeah. Okay. Yeah.
I
Yeah.
might
Some
need to
Bitcoin guys, I guess.
clip out that self-made billionaire on if you ever want to start a trading school on mining stocks, we're gonna clip out that self-made billionaire because it's a really interesting A advertisement, but B call to develop sector expertise in a pretty unloved sector.
So
Uh
I ran an investment strategy at my previous hedge fund and basically turned approximately like 25 million Canadian into close to a quarter billion over that period of time, not including taxes. They never got accounted for, but just the pure reinvested profit. Like, hey, if I took 25 and then made a double and I had out 50, okay, I deployed 50 kind of thing. That's how I managed the money there. I ran it. It was a self-imposed kind of restriction. Um, could I have turned 2.5 million of my own money at that time into 25 million doing the exact same thing? Yeah, absolutely. Everything. In fact, I could have done more because some of those things it's hard to move the needle with
yeah,
some of these
yeah.
events. Like, could I have taken $1 million, run that strategy, and turn that into 20x doing the same things? Yeah, absolutely, I could have over that period of time. And then, okay, I mean, I left K2 when I was in my early 30s. I mean, like, okay, run that again that was a 6-year period. Do that again. Look where you end up. Like, you can do that. I've watched lots of people do that. I know lots of people who have done that. It requires a certain skill set, but the alpha is enormous. It's the one area that I believed. And in mining, if you are really on it, you track things, you make like real deep thesis bets on assets and technical theses. And you're right, it. You know if you're right or you're wrong the price can move, the equity can perform for other reasons, but if you bet that mine would yield a certain quantity of metal at a certain rate by a certain period of time at a certain cost profile, and it happens, you were right for the right reasons. You know it. You didn't go invest and have some like hedge fund where you had 60 positions and you squeaked out, 5% gross of alpha, and you don't really know how it happened. You're not sure if all your bets are right for the right reason. It's kind of murky. No, but in mining, you bet on very specific outcomes. They're physical, they're tangible, and you get to find out. So you get your answers. And I love that about it. It's
No,
hard.
I really like that because it is
No.
very frustrating investing when you make a bet on something and then it doesn't work for you bet on something and that happens, but then it doesn't work for XYZ reason. Like in mining, it's so wide. Like as you're saying, you bet on the geology, and if it's right, like gold goes to 1500 versus 1800, doesn't matter. Like you're probably going to get paid if you were right on the geology. Darren, this was fascinating, but we started a little late, and I am coming up on a hard stop because I've got to go pick my daughter up from daycare because we've got a weird day today. But this has been awesome. I'll include a link. Everybody knows Muddy Waters at this point, but I'll include a link in the show notes. I appreciate you coming on, Darren McLean.
Yeah, no worries. Good chatting, and never explained why we're long at Muddy Waters things, but The short answer is it's equally as contrarian as everything else we do. And when you're right, it pays 5x, not 30%.
When you say when you say you can 10x the money in 5 years, no, look, this has been a very different podcast than what I normally would do, but it was fascinating.
Yeah.
I don't know if it's inspired me to look at mining more deeply and spend all my time on it, or just continue my, oh my God, I will get my face ripped off if I ever look at anything in the sector.
What I would say is this, we didn't really talk about any names today, but probably a good thing to do is if you're interested, if anyone's interested, maybe on your side, walk you through a thesis. They'll explain what it's worth, why it's trading where it's at, what the outcome looks like, and how to break it down. And yeah.
I had that on here, but we're almost at an hour already. So yeah, it's cool.
No worries, man.
Thanks so much, man. Talk to you soon.
Cheers, dude. Have a good one.
A quick disclaimer: nothing on this podcast should be considered investment advice. Guests or the hosts may have positions in any of the stocks mentioned during this podcast. Please do your own work and consult a financial advisor. Thanks.